Have you ever wondered how traders make informed decisions in a volatile market? The secret is often fundamental analysis. This powerful tool is how traders assess a security's intrinsic value, digging deep into economic and financial factors. Think of it as financial detective work, searching for clues in the economy, company financials, and world events to predict the future of a stock or other security. Now that you know what fundamental analysis is, let's dive into how to do it. The first step in fundamental analysis is understanding economic indicators. These are key pieces of economic data that tell us about the health of an economy, and they're used by traders and economists alike to gauge economic trends and make predictions about where the market may be headed. First, we have inflation rates. Inflation is the rate at which the general level of prices for goods and services is rising. A low, stable inflation rate is generally seen as a positive sign for an economy. Next up are interest rates. When central banks raise or lower interest rates, they're indirectly influencing borrowing costs, which can stimulate or slow down economic growth. Lastly, we have GDP growth, which is a measure of an economy's output. A growing GDP indicates a healthy, expanding economy. By keeping an eye on these economic indicators, a trader can gain a better understanding of the broader market trends. The second step in fundamental analysis involves digging into a company's financials. Now, this might sound like a daunting task, but fear not. It's all about knowing where to look and what to look for. Traders often turn to financial statements, the fiscal footprints of a company, to evaluate its performance. These fiscal snapshots can reveal a wealth of information. For instance, earnings per share, or EPS, is a key metric. It essentially tells us how much of a company's profit is allocated to each outstanding share of common stock. Another important metric is the price-to-earnings, or PE ratio. This ratio gives us a measure of a company's current share price relative to its per-share earnings. Lastly, don't overlook the debt-to-equity ratio. It shows the proportion of a company's funding that comes from debt versus its own equity. Understanding a company's financial health is crucial in determining its potential for future growth. Finally, traders also pay close attention to news events and macroeconomic factors. These elements offer insight into potential shifts in the economic landscape, influencing market trends. A new government policy or a sudden change in inflation rates, for instance, can cause significant shifts in supply and demand. This in turn affects the price of securities, making some more attractive than others. Understanding these dynamics is key to anticipating market movements. Staying informed about current events is an essential part of fundamental analysis.